In January 2014, Morgan Stanley included India in the category of Fragile 5 economies alongside Turkey, Brazil, South Africa, and Indonesia. However, fast forward to the present, India has significantly climbed up the economic ladder and now stands among the top 5 economies in the world. This rise is partly due to the cleanup of India's banking sector after scams broke the back of the sector in the 10 years of the UPA regime. Until 2014, loans were given to those in the good books of the government, sometimes through just a phone call. This indiscriminate lending to anyone who had political contacts resulted in bad loans which were brushed under the carpet by the banks due to political pressure. Indian banks were facing an unprecedented NPA crisis. Gross NPAs were already climbing in 2011-12, but this quickened. The ratio of gross NPAs rose quickly from 2.8% in 2011-12 to 3.8% in 2013-14, the UPA's final year. It didn't stop there, as more and more loans started turning bad, raising the ratio of bad loans to 4.3% in 2014-15. It was then in 2015 that the RBI started the asset quality review, revealing the true nature of the crisis. In 2018, gross NPA ratio stood at 11.2%. Both the former RBI governors Raghuram Rajan and Urjit Patel blamed the UPA for this crisis. In 2016, the Modi government brought a new law that was nothing short of a revolution, the Insolvency and Bankruptcy Code, which facilitated the recovery of debts for banks. Additionally, to bolster the banks and provide them with crucial capital, the central government infused approximately 3 lakh crore rupees into state-run banks. Further, weaker public sector banks were amalgamated with stronger ones, resulting in a reduction from 20 banks at the end of 2017 to only 12 banks now. Efforts were also made to cleanse the banks' balance sheets, involving the write-off of a substantial number of loans. Now, write-offs are not loan waivers. The loan recovery process continues. Unlike with waivers, they are just taken off the balance sheet so that fresh lending can continue. Write-offs are a technical requirement under RBI rules that have been in place long before the Modi government came to power. These reforms have led to a significant decline in NPAs, which currently stand at 3.9% as of March 2023. Moreover, the asset quality of public sector banks improved with gross and net NPAs reaching 4.97% and 1.24% respectively as of March 2023. By ensuring deposits up to Rs 5 lakh, more than 99% of deposits became safe, leading to a renewed trust in the banking system. With the adoption of the JAM Trinity and issuance of licenses to payments banks and small financial banks, India moved towards deeper financial inclusion. The opening of 500 million Jan Dhan accounts facilitated fund transfers to women during the pandemic. Further, in 2022, for greater use of technology and getting digital banking into India, the scheduled commercial banks are establishing 75 digital banking units in 75 districts of our country. About 40,000 compliances have been done away with in the last few years, and a national single window system has been established. Over 6.6 lakh crore rupees of bad loans were recovered. MSME loan accounts worth 1.8 lakh crore rupees were saved from becoming NPAs by extending credit. Due to the Modi government's continuous efforts, public sector banks' total profit crossed 1 lakh crore rupees in FY23, which is almost 3 times the level in 2013-14. While banks in the US or Europe, like Silicon Valley Bank or Credit Suisse, were collapsing earlier this year, the Indian banking sector remained resilient because in the past 9 years, the Modi government transformed India's banking sector into one of the strongest in the world. From being saddled with NPAs to making record profits, India's banks have come a long way.